Hello viewers, welcome to our channel. Today we are going to discuss about the topic that the stock market functions all relation with the mathematics. So mathematics means the stock market price movement all it related to the formula derived from the standard deviation levels. Like check the Bank Nifty, if the price move develop in this area, after that it will come for the new area for development process. In this development process, the initial stages, the buyers and sellers they made the transaction. Initial stages, the buyer and sellers made the transaction with graphical stage. Graphical means, for example, that this is the bell curve range from max, this is the center point, this is the center point, x-axis, this is the y-axis, x-axis and y-axis. The price above this level, these are the seller zone. Seller zone means the price every day developed above this zone, this positive zone, and it will come and test the negative zone. So whenever the prices below this level, they have some part of development around this area. It's formed like a mathematical calculation in this area. The price developed like shape of the bell curve. So in the max itself tell the formula that the price auction process inside this zone, it makes like graphical stage. So standard deviation levels, it acts as a mathematical formula for this range. After that, this auction process incomplete, it will come and test this zone. Whenever this auction process is completed, it will go for the new zone. New zone, here the sum of the auction process taken. So whenever the price going for the new area, the auction process continue here. The auction process continue here with like max. Max means that graphical stage. Graphical stage. So above this level, who made the transaction? Like this is the new area zone. Here is the graph. The center is the x-axis zone and y-axis zone. So above this zone are sellers, below this zones are buyers. So bell curve shape like transaction between the buyers and the sellers. So sellers and buyers domination, the auction process, the transaction process between buyers and sellers, finally they formed the shape like bell curve. After this x-axis, the price arrangements on the horizontal plane, it's formed like the clock. It give the information that the internal clock give the information that bell curve is developed. If it is developed, it will go for the new area, whether it is upside or downside. So all these price movements coming from this level, all it's forming like a mathematical relationship with the x-axis and y-axis. This all transaction made by the buyers and the sellers. So all graphical formula can be generated between the standard deviation levels. So probability of chances like it make like develop the bell curve. So the movement from the price, it's all like forming the mathematical between the above two zones. One is the positive zone and the one is the negative zone. This is x-axis and that is y-axis. The price arrangements above the x-axis levels all the sellers zone, below this zone or buyers zone. So all the finally this all the transaction made, it should form like a bell curve. After develop the bell curve, it's going for the new area. That is for after development, it will test the new area. So this like of transactions all related for each and every movement, it's coming the standard deviation levels only. So exactly the max it will work here, and this type of profiles all the developed in one area with the volume generated. If they generated the volume profile also, how much the volume they are developing in this zone. So the price along with volume, value area are developed in this zone with the price movement shifted like a mathematical calculation from between the standard deviation levels. So price movement, all the stocks, if it's back tested all the stocks related to the mathematical move only. So this is like a natural auction process between the buyers and the sellers. So move happened between the location below the x-axis, it is the buyer zone. Above the x-axis, it says seller zone. So finally, it's formed like a bell curve shape. This is y-axis and this x-axis. This x-axis, the price arrangement horizontally, it's formed like a internal time clock. It will give the information that the bell curve developed. After developed the bell curve, it will go for the new area, whether upside or sell downside. You can find out here who is domination. If the seller is domination, the price exactly coming down. If the buyer's domination is there, exactly it will push the price to go for the new area. So this type of clock information give the next set of movement with the new mathematical calculations for the next new development area. So these are all formed between the particular area, graphical between the x-axis and the y-axis. So everything you have to made between the price arrangements between these two zones. One is buyer zones and the seller zones. So this is the natural process. That's what the stock market movement is relation with the mathematics. So thank you all. Thank you for supporting my channel.